Hello trader, welcome back to another live session for NOI session on Monday, 1st of December 2025. Now, we had a previous session successfully completed, an incredible trade as well. You guys have seen that. So, looking at this session to see what kind of trading opportunity we might have today in this session here, and also we will be discussing in depth on the market structure, trading psychology, as well as the live trade setup. So it is always enjoyable to trade all of you together with all of you. So make sure, guys and girls, before I progress with this analysis and live session, smash this like button and also hit that subscribe button if you haven't done yet. Press the notification bell so that you are not missing any of the content that I am posting every day. So beginning with gold as usual. Now we do look at also the currency pairs. Today we see that there is a trend on euro dollar and British pound US dollar, AUD USD, dollar yen as well. Dollar yen looks heavily trend as well. So we also will be looking at a weakness on DXY. Dollar index is on a bearish trend that you can see. If you look at, I have already posted one analysis, and I hope that you guys have seen that analysis as well. So in this session also we'll be discussing in depth on, as dollar index has got rejection from this higher price here. So before we look at that, I'm also looking at here, first of all, looking at gold, and we'll be looking at the multiple time frame analysis. All right. So with the multiple time frame analysis, we will be able to see the overall picture in the market. And then based on that, we can enter any trade coming along the way. As the first day of the trading week, let's look at the weekly chart to see how the market is doing here. So from the weekly time frame, if we look at the multiple time frame perspective, we can see that this is long-term bullish market. So past couple of weeks price action that if we look at, we can see that here in the past couple of weeks, the market was in a heavy trend, and at the same time also especially in these 2 weeks, the two narrow weekly dojis that we can see has formed, and these two narrow weekly dojis where the market was in a sideway. So due to the shutdown that we have seen, mostly this doji carries the shutdown period, also this long week here. So therefore the past week was a big bullish market structure, especially at the end of the week we saw that there was a big move. Also in the middle of the week there was some sideway market that we have seen in the past week. Now this week I'm looking at entry opportunity here in this market. Okay, so this is the current market structure on gold, and with this current market structure on gold, we can see that from the weekly, currently it's showing a significant bullish trend here in this market. Looking at the daily chart, so as the first day of trading week, the Friday's daily candle was a big bullish confirmation here on this market, and followed by, we can see that today's price action has just crossed this previous swing high here, which is this resistance line, right? So that's where you can see the market is currently in a bullish trend here. So here is the market maintaining with a double bottom formation. The price has created this impulse correction, double bottom, and the market is maintaining this series of higher high and higher low, which is in an uptrending market structure. So at the moment, if you look at here, this market from the daily, from this support level, there is a bullish bounce back to the upside here that you can see. And from the 4-hour chart, that if we look at from the intraday perspective here, that you can see there is a the previous session was a bull candle that has formed here, and we can see the market is maintaining a series of higher high and higher low, which is in an uptrending market structure. So this is a 4-hour bullish doji here. Now this is a significant candlestick pattern that I'm primarily placing my level at 4205 is because the daily low, right? And that daily low that you can see in this market, that daily low is also aligning with a very important bullish liquidity doji. Now that's, if you look at the indicator, that's this is our indicator that shows that there is a significant we can see there is a stronger volume in that candle because it crossed the previous session's low and closed past so if you look at the next one has formed is a narrow red doji, right? So if you look at here, this is a narrow red doji, and that narrow red doji is, that's a bullish price action, right? Because the buyers has created this long wick candle that you can see here, right? So that long wick candle is created by the buyers, and with this bullish price action pattern formation here on gold, and then followed by another bullish engulfer. Now this current one that we are looking at currently, if you look at this candle that we can see here, there are two possible scenarios. This market can have now deeper pullback, all right? It even may drop here. One probability, the other probability is to continue its trend back to the upside. And I'm considering both scenario, looking at now the lower time frame price action here to see which one is most likely to play out. Here is the 1 hour market structure where there was a breakup structure that we have seen, and that breakup structure has given again stronger momentum here and maintaining this series of higher high and higher low, which is an uptrending market structure here in this market. And that uptrending market structure, you can see the price is now creating significantly bullish impulsive move back to the upside here in that market. So looking at here on the lower time frame, if you look at the 15 minutes, and I'm going to look at the lower time frame here, which is now lower time frame that you can see. That lower time frame is where this is a trend line, if you look at, and that is this trend line is being respected here that you can see. So it is a bullish channel. The market is moving in that channel that you can see. You look at, and here is a move, guys. Here is a move. ready for an entry, make sure that always follow proper plan. Risk management is the key, and also the trading psychology we discussed in our previous session as well. Now I would like to also, while we are looking at this level for an entry, for those who were with me in our previous session, and I believe that you experienced the trade that you have opened here, so I'm gonna go to that little bit so that you guys have better understanding of each trade that you are opening, and that's how you can learn and grow as a trader, right? That's where the growth comes in play. So let's look at here the trade that we have opened in our previous session here, and let's like to bring that here. I think we were here that opening in our previous session. Okay, so the market now again maintaining its uptrending market structure. I'm looking at potentially to look at where the price is heading to, and it's important that we enter from a key level, as the market trend is currently bullish. So we entered our previous trade is here, if you guys looked at, and I'll put the exact entry, stop loss and take profit here so that you know that what was the entry, and that got us straight back to our near our profit target here. So the entry 42.0, so basically it might vary a little bit, is different depending on what you have entered time frame. So here basically this entry that I had was little earlier than it was. So basically it, as soon as we have opened, it just bounced off that level and moved in the direction. We will be I'll be going through in depth of this strategy, and as well as what was the main reason behind the trade. So understanding the proper strategy education will give you a better understanding of the market structure, and that's how you can keep growing and learn as a trader. Now let's look at here on this market what kind of trading opportunity we have at the moment. Now there is a if you look at here, there is a breakup structure here that you can see. Here is the support level. The market has broken off this structure that we have seen the previous session. Now, how the market is evolving here at the moment, if you look at that, you can see the market created a very unusual breakup structure here that you can see. This drop here, it's a false breakdown and then bounce back to the upside. So as the market trend is bullish, we are looking at entry in the major direction of the trend. So let's go back to the 1 hour chart again, and you can see that the price is just crossing this 1 hour support here, right? And this market can come back below to this 1 hour level or can continue to rise. But at the moment, the price in a level that where you want to see further deepening, and that's where you'll be able to find a better entry opportunity. If you look at the 1 minute structure here that you can see, this kind of false breakdown is important to look at. This is a false breakdown. So what is false breakdown? Also very important to understand, is that's where you can start to recognize the market structure, see the pattern, how the market is doing. Now, the false breakdown is where the market breaks unusually in opposite direction of the trend, and that's basically the market prepare for a bigger move in the opposite direction of false breakdown or breakout. So when you can recognize a false breakdown, one of the best things that happen is that once you can recognize false breakdown or false breakout, what's the advantage? Let's understand. Because the big move happens when the market does that. And as a trader guys, this is key. When you can spot a false breakout or breakdown, you can potentially have a very high probability to predict the directional move in the market, because you need only two things as a trader, right? So you need to answer W to complete a trade, right? From execution to the completion, you need to answer three vitally important W. And when you can answer this 3W, your trade become very high probability. Like you can enter into a high probability trade. So the first W is which way, right? Like either, because you have two buttons, buy or sell. Should you be buying, pressing the buy, or should you be pressing the sell? This is the first thing that you need to look at. Once you are able to determine either to buy or sell, then you are almost certain which button you're gonna press, right? So the first W is answered. Now, therefore, that W will come from the market structure. Now, once you can spot a false breakout or breakdown, right? Let's say you spot a false breakdown here in that direction, the market revert back again. So the false breakdown below, the trend is up, therefore your directional bias, the high probability is to the upside. Okay, so therefore that's where we are looking at potentially bullish entry opportunity. All right, now once you got the first W, the second W is when, right? Now you found the directional bias. The next thing to look at is when, and that when comes from the price action confirmation, because we need to see that the market has printed significant candlestick pattern identical that can be considered as potentially bullish or bearish depending on the market structure. So if the market structure is bullish, we are looking at potentially bullish price action confirmation for an entry. So you got the second W answered. This third W is Y, right? So that means you need to keep a very, very stronger or develop a strong trading psychology to keep that trade running in, or keep yourself trading in until you become better trader, right? That can handle a bigger trading account or whatever you want to become as a trader. So therefore, if you look at the market structure, that will give you a clear understanding of the first W here that you need to look at. So now at this moment, if we implement that in this current market structure, we are seeing that this is currently a bull market, and therefore we are looking at the dip for an entry to buy. Okay, and That's what I'm looking at. Now trading is all about probability. Keep in mind, guys, that that's where you need to look at always from the probabilistic perspective rather than certainty, because it's all about probability. You need to always look at the bunch of trades that gonna give you better trading opportunity over time. So here is now lower time frame market structure that you can see, and in this lower time frame market, that means the 1 minute structure, this is the current level of false breakdown at 4248. If the market drop back below, there might be dip in here, and that's what we will be looking at our potential entry. I think there might be a rejection here, because the daily low, the market has gone well above the daily level. This is the daily price action. So far it might come back to for a retest, and if the market now breaks from the structure, we are looking at entry. There's a big rejection on the 5 minutes. This red candle that you can see can be, that red candle can be a sign of false breakdown and moving back up again, or can be bigger, starting up a bigger move below before it bounces. So there is a trend line that we have drawn here, and that trend line is what I'm looking at the market to potentially break. And if the market breaks this trend line, we are looking at entry, potentially entry opportunity, because we want to enter from a very important area of value where there is a high liquidity, where we have a better trading opportunity in this market. Thanks for joining here, guys, and I hope that you're enjoying this live session that I'm doing every single day. If you're enjoying, make sure you now here you can see the market is slowly building that momentum. So looking at, if we see this market breaks out of this level, and because the market is on a bullish trend, any key level to be broken is where we can look at entry. At the moment, the price in a zone where we might see for deeper liquidity sweep here, or you could see that continuation back from this zone. So not in a very perfect area that you can look at setup yet, but I think it's gonna break from this structure properly before you look at an entry here in this market. Because the key here is to enter from an important area of value. And once you can enter from an important area of value, we have much more a better risk reward as well as high probability trade setup. Because once you can enter into a high probability trade, that is where you can keep trading this kind of setup over and over again, and you can repeat the same trade, same kind of setup over and over again, because the market creates the similar kind of market structure repeatedly, right? So for example, if you want to trade bull, now this is a bullish market structure and you want to trade, let's say you want to buy this market from a key level of support or resistance, or you can see the market has created this flag pattern, or you could see the market has created that semicircular pattern, or created any kind of market structure. Could be cup and handle pattern, sometimes it's very common. And once you see the market has created those pattern, right, or bull flag, right? So bull flag is very common. As soon as you see this pattern, get into the trade. No. As soon as you see this pattern, wait for the market to break from the structure, right? That's where the key. Now, as soon as you see the market has created those pattern, wait for that pattern to break in one direction, right? And if a bull flag break below and then started to trend back to the upside, that is where the very high probability trade. And sometimes you will see that more often the market has broken back below, has gone back up, and then broken back below again, extended below, and then trending back to the upside. One of the best way to know either it's a false breakout or a valid breakout is understanding it here. We will be discussing in depth on how you can see that. Let's say this is a bull flag, the market has broken back below, gone up, and then broken back below, and then gone up. So you'll see that it might even range like this, right? Now, in what situation you can have more better understanding of, instead of ranging, it's gonna move to the upside. There are ways to understand more of the directional bias, because the market breaks from this bull flag below, gone back up, it may come back below, it may go back up, and it may come back below again. See, this is a kind of puzzle, but once you get the details of in what situation you have more probabilistic and surety of the market to potentially not to come back like that, but to trend back to the upside and take a big trade. Big means that high probability trade is how the market has created this move in terms of support and resistance. All right, so these are a kind of therapy, like trading therapy, right? Once you can get that, you become better trader. So make sure that you take all of them with notes, and we'll be looking at the real market so that you guys can understand that, can learn and grow as a trader. So now let's look at that here. Delete that levels. Okay, here is the support that we are looking at, and in that support, okay, this is where the market created the support, expecting that the price to break that low potential and then to give us an entry opportunity. If the price breaks this resistance, we might see that continuation back above. If it fails to do so, we might see that dropping down to this support. We'll be waiting for the market to show up. Welcome back to this live session. I hope that you guys enjoying the live session. If you're enjoying that, I will know from the likes, and also hit that subscribe button if you haven't done yet. Well done. It's going up. Thank you. Now, if it is creating a reversal structure here, we would see the market is moving back to the upside here. So the market slowly, it's a little sideways, but it's still maintaining a possible uptrending market structure here. That's what is expected. We want to see that there is a bullish market structure. And once the market maintain that market structure, we are potentially will be ready to enter a position here. Now, this is what we did in the previous trade that we have opened. Let's understand that what was the logic and the strategy behind this trade. Now, if you look at this market structure that we have seen in our previous session, here is where the price action, if you look at, this is the move that we have seen previous session. There is a strong impulse. Now, this is what I was talking about, that when you see that an impulse, that means a pole creation, right? And that impulse is important. So once you can see that the market has created that pole, right? And once you see the market has created that pole, that impulse is being created, Okay, and with that impulse, the market has broken back below. You can see that from that structure, the price has broken back below, and the price, then the market has gone up, drop back down again before it finally breaks to the upside. Now this breakdown was a false breakdown, and when you can spot that false breakdown, you have a better understanding, because you want to see the market breaking from the structure, very important, to the opposite direction of the trend. So the trend here is up, the market is broken on the other side of the trend. So this is what happening here, that you can see at the moment the market is again on a breakup structure. Here from the 1 hour, there is a candle close with a doji. Now this 1 hour candle close can push the price even back down here, because this is a doji at the top, and if this breaks, we might see a deeper move here in that market. So you can see after break of this, from this false breakdown, the market is slowly building that momentum back here above this structure. So the initial breakup structure that you can see the prices cross this low here is a possibility for a continuation back here in this market. So there is a rejection again. That could bring that market well below here. There's a structure formation here, expecting the market to potentially break that high here to create a potentially new higher high in this market. So lower time frame price action showing up to be here to retest that level and then to return again back above in this market. Here's the support level. And you can see the market breaking that low here. As we mentioned, we might see that now deeper pullback to this support. And with that support test, they're expecting the price to come back below, potentially break that low, and then to return again back in the direction of the trend. Here's the support level. The market may eventually could come back well below here. This is an important level that we are looking at in this market. And if the price break that low, as there is a long consolidation, we see just the break of trend line. Market has broken from this trend line here. And 4-hour chart that you can see the price has just again rejected back below this 4-hour low. So there might be deeper pullback here in this market, and that pullback could bring that market well below, as the market left an imbalance in that direction here. I think there's a potential for breakdown here on the lower time frame. So there is a doji, the market has crossed that low, and now as the price has broken that previous hourly low, we'll see that if the market is breaking that above here or dropping further down here, it has crossed this another key support level. This is the previous level of false breakdown, and there is a possibility now the market to potentially bounce off this level here. That could bring that market back potentially above this again to this daily high, or you could see that further downside back below. Now, depending on how the market structure is creating, of course, that you will be looking at entry. The previous session already there was a stronger liquidity sweep. Now this market can still break below for a deepen, as the market already has made its move back to the upside, or it can bounce off this level depending on how the market is structured. Here I can see there is a possibility. There is a possibility for any directional move. Okay, that's the market either will move up or down or sideways. But what's your thinking? I think there is a possibility for deepen, as the market, for our perspective, getting the rejection from this high here. And for us to get an entry, we want to see that the market again aligned with the major direction of the trend. That's what I'm looking at. This is what we're looking at. At the moment, the market is slowly creating that structure here. And once the price prepared with this move, we will be looking at an entry opportunity here in this market. So after break of this low, the price slowly trying to break above here, and that breakup structure that you can see here, the market is, if you look at from this support level, there is a breakout, right? So with this breakout here, now looking at the market, this is now on a, if you look at, this is a local downtrend. The price has penetrated that below. If this market structure breaking to the upside here, that's what we want to get into the trade after proper confirmation that the market, though there is nothing confirmed in trading, you can anytime can get it. The price just can do completely different. But here we are playing with the probability, and as there is a impulse that you can see, what we are looking at the market to break and then continue to return back in the direction of the trend. So here you can see there is a bounce from this level here, and with this bounce, okay, expecting the deeper pullback and then to continue to trend again in the direction of the trend. So that's what I'm looking at, the lower time frame, the price action to pull back and then to return again back in the major direction. So we see there is an impulse back to the upside, and from this breakup trend line that we are discussing. Now the market has broken the trend line, getting back up again in the major flow, right? So with that, going back up again in the major flow, all right, so now you want to see that retest and then continuation back. So there is a breakup structure, and now it's coming for a pullback or retest. Now if this retest fail, we might see formation of an inverted head and shoulder and then going back to the upside. The rejection are expecting further deepen and then return back again in the direction of the trend. So you see there is a break below. So you have seen there was a first of all breakdown, penetrated that support, bounced back to the upside and expecting the market to trend back down here. And once the price managed to continue to rise here, that is where I'm looking at entry opportunity here in this market. So if you look at that, the market structure, here is the drop, and what we are looking at now, that the market managed to bounce back here. So as if you look at, there's a green candle and then forming another red candle. So this could be that maintaining further deepen, unless the market is not breaking below and instead going back to the upside here, we will be on the trade with this breakup structure. That's what I'm looking at. We can place a pending order in case the market goes up. We want to get into the trade for this potential move back to the upside here. And if you look at that level that you can see, this is the resistance line, expecting the market to bounce off that level. All right, so this is what I'm looking at, an entry opportunity. As if you look at, there is a break below and again breakup structure. Now this breakup structure can be a sign of deeper drop, almost back below to this daily low. One possibility, that means the market is even coming back to 4205. The other possibility is the market respecting this support and then returning back to the daily high. So we want to take that trade if the market is going to the daily high, because the major trend is bullish and you want to trade in the direction of the major trend. Let's see how the price action is creating here in that area. So got that back again. That's where sign that the market may continue to rise back here to the high. So I'll be using here a pending order for this break of this resistance line. If the market managed to break that high here, we will be taking to the daily high. This is not a daily high though. We can see the market from the 4-hour high that you want to see the price to going ahead and retest this intraday high, which is nearly to 90 pip or 95 pip potential move. And here I'm going to place a buy stop order above this high and stop loss below this low. We will be taking the trade for the first TP at this level, and if the market continues, we can either close the full profit, or we can, if the market goes, it still can come back down here to the stop loss, and so therefore the risk has to be managed properly. And here I'm looking at a buy stop order, though the market is little quicker, so I'm placing buy stop at 4255 level. If the market goes up, we'll be on the trade. $4255.09 and stop at 4246.70, and TP target placing at the first placing at 4263. And if we need to keep running some position, if we see stronger bullish price action, we'll be we'll keep running a portion of the position from that level, and we'll be placing the partial close. Now here I'm placing a buy stop order, not a market order. So you'll be, if the market goes up, we will be in the trade with a pending order. Welcome. Placed a buy stop here. Now, looking at calendar today, there is a news coming later in NOI session that can be a potentially significant move in the market. If you look at the calendar that we are looking at in my zone 2 a.m., we will be I'll be trading during that time period. We'll be also posting analysis. So this is a high impact news, which is ISM manufacturing PMI can create significant volatility in the market, so which is good to see. And tomorrow, after tomorrow, coming up on GDP AUD, which is followed by later in the NOI session will be ADP non-farm employment change. This is a big week, also followed by unemployment claims on Friday. That means Thursday NOI session. And next week after will be FOMC. That's gonna be a big week, really, especially 2 weeks, right? These 2 weeks was exclusive, and somehow that we can see non-farm employment change moved to 17th of December. This is the last working days in many areas. So basically that's gonna be this week, like in these 2 weeks, a really crazy move that I'm expecting in the market, which is good to see, because the market moving means that you're gonna see that there is a trend in the market, and that's gonna create increased move in the market. And this is what we're looking at to enter some trade based on the trend. And the trend is very important to look at. This is what we are looking at the market to find a trend. So trend is very important, especially the volatility is key. So when you see that there is a higher volatility, volume, that means volume in the market, the trend moves faster, right? You know that we more often, especially when I started my trading, that I thought that it's all about knowing the technical analysis, right? Knowing just how to read the candlestick pattern, how to read the trend, and that's all, right? But more to it. And you know, you can read a book or watch some videos, lessons to learn the candlestick pattern, to learn the trend, but something cannot be learned, which is the experience. And trading in the live market is you need, and that's why this live session is so important. And also that's why it is so important also for you to join every Zoom session that I'm conducting in the premium group, where we discuss some of the things that you may not know otherwise, which is very, very important. And if you look at the live market experience, that makes all the difference between two traders who are amateur or doesn't know, who has a vast amount of experience that can, you know, the trade. For example, if I give you, if you see a trend in the two hours, okay, prior to FOMC, okay, you see there is a false breakdown or false breakout, and the market started to trend, creating series of higher high and higher low. One scenario, 2 hours before the FOMC. And in another scenario, you can see a trend is running in just after Tokyo session close. Okay, because when the Tokyo session closed, before London, there's a gap, right? That gap is more often you're gonna see that there isn't much volume in that gap. And if you see the trend, I will not be interested to trade much of that move. Okay, that comes from experience, that comes from becoming a trader in the live market. That's what you need to know, that's what you need to understand as a trader, and that's where you become a successful trader. Welcome guys, and make sure you like this stream. Did you like? And also subscribe to the channel. Don't miss out that as well. So the market is getting out of that level, so which might lead that market back up, and we might get a trigger. Depending on it is not active yet, but we might get an entry shortly in this trade. The trade is active. The trade is active, and we want to secure another one possibly. And I'm running in with this setup and expecting the market to cross this nearly to the TP, or possibly to above the TP, before we look at any modification here in this trade. Moving on, and would like to see the market is crossing this high and creating a new higher high in this market. unless it's a false breakout again. That may happen. If that happens, then we might see market coming drop a lot. I'm looking at this market potentially to remain upside here. We see there is a multiple liquidity sweep. So basically there is a doji here, which was a rejection followed by another long wick rejection. So expecting after back-to-back to rejection, the market to potentially create a new higher high, right? So to cross this level here, and if that's the case, we would like to see the market to create a new higher high. So the previous high here is this level. That's where we placed our our TP. Like to see one more flight back above that can bring the market above this high. So there's a 15-minute candle close coming in. Getting rejection, guys. This is where it's getting a little interesting. So here's a false breakout, then we might see the market to remain downside. Before the 15-minute candle close, to see that how this doji is being closed. You always will think in the direction of the trend and then let the market recreate that structure again for that move back above. Okay, so it's trying to go back up to the direction. This is little far still yet, so nearly to 2 hour 15 minutes. We see some bullish bias again. Yeah, that's what I'm looking to see the market to trend back again in the major direction. So there is a bearish now with this false break to the upside, the last 15 minutes with the doji closed on the 15 minutes, are you going to see possible bounce, or you're gonna see that deeper drop to the daily low? The market can move in a very interesting way. So it's getting another, so from this support, you look at this is an there's a doji, the market getting primarily a reaction from the buyers, so that could take that market again back to the upside, which is okay. Now looking at this market structure to show possible side bias here, we're going to see a bounce back here or continuation back below. If the market breaks that support, we might see the price to potentially drop down to the daily low. On the other hand, if we see the market breaking that high, we want to see that it's going back to the daily high again. Now this structure that you can see is important to see how what kind of market structure is creating. So we're nearing to the 1 hour candle close here, and this 1 hour candle close after the previous 1 hour doji. The previous 1 hour doji was liquidity sweep, and this 1 hour candle closing in 10 minutes is expecting that the market to retest this. It might come back for another retest, or it might move in a sideway. And there's the market on the support level here. It dropped almost to the support, and So it's created a narrow doji from this high, and still on the trade, and that's very narrow level. The market might, if you look at this, is a support, and that support in the past tested few times. The market might get a reaction from that level, from this very deep point here, and so looking at the 5 minutes price action with this market structure, might go down further back below. It's basically retesting that support again, and might get from here. We could see that back above, or could drop. So if you look at the 1 hour, it's nearly to the candle close, and looking to see what the market is creating the structure here. It's interesting here, and we are out with the trade, and so the market has, if you look at this, there's a breakout structure, there's a false breakout, so you are out with the trade. You will be looking at further entry after this breakup, this support here. This is the daily price action, where daily support and the daily open and close. Here is the intraday time frame that you can see, and there's a head and shoulder, guys, and this might now break that below to this daily support level, and that's what looking at in this market. There is a break up structure, and that break up structure might bring that market back below. This is the today's low. The chances that now it's gonna start potentially a downtrend, because quite a few times the price has created an unbelievable false breakout here. So if you look at here, there's one false breakout, right, and then drop back down, created another structure, another breakout, but it failed to create a new higher high. Instead, you can see the market has started to trend back down. So basically that's gonna show that the market potentially to trend and continue to drop down here, and that breakdown could bring that market back below to this support level. Now at the moment, if you look at here, you can see there's a breakdown here, and that might bring that market to continue to drop as there's a head and shoulder. Depending on that price action we are looking at in this market, so there is a doji that you can see in this area. Now that might be a starting of another move, because the price on the 1 hour 10 EMA at the moment, and testing that 1 hour 10 EMA, this is the current support level the price has tested. If you look at here, you can see this is a support where there is a liquidity in that area, and so the multiple time frame analysis showing that the price, this is 30 minutes candle closed passing this 3 high liquidity zone, and there is also multiple times the market has got rejected here. Now after this 30 minutes candle close, the market may continue to rise here back above, or we might see the market may continue to drop here, depending on what kind of market structure is. You can see the 1 minute trend is showing that here. Now if the market breaks from this 1 minute trend back to the upside, we might see again going back in the major flow. So if we re-enter again, we'll be using that pending order here back to the upside. That means if the market breaks any of this important resistance, that means trend line, you will be on the trade for this potential bounce. Otherwise, you still can expect this market to come back here to this support level. You can see this is a double bottom here, and with the double bottom, the market creating a structure. Okay, so it might get prepared for, because this is support that you can see it has tested, broken back below. Now if it is a false breakdown, again we could see that potential bouncing back. Which is very possible to happen. And it doesn't look to me very strongly bullish, but if the market managed to break this high, it's gonna continue, because the 1 hour candle close past the previous one's low, and that is also can be potential trend continuation here. We will be again using the pending order once the market ready for a possible move. As we see, there is a double bottom here, okay, and breakout. Now what you want to see, the market has tested enough before it continue to trend. If it goes back to the major flow, you always trading with the trend. That's the key, guys. Trading with the trend. Daily trend is bullish, so you always will be looking at entering in the direction of the trend. So this is the 4 hour resistance that you can see. The market could potentially bounce off that level, and that's why the market is potentially going back to retest again. The stop loss was pretty tight, and the market now it's just pushing that back again. That's interesting. It just created this false breakdown for gaining momentum from this support. Market does this all the time, guys. This is why it is so important that always use a risk management, which is very important. Getting that backside. Gone straight back to the upside. How about the euro dollar? That you can see euro dollar is continuing trend back to the upside, which is bull market, along with the DXY. That you can see the market is breaking back below here. And that's what the analysis also posted in the channel. If you guys looked at, I highly encourage you to do that. And now as dollar yen also showing the downtrend. Now with this analysis on gold here, the gold again has broken back to the upside here. Now this move on gold that you can see has crossed this high. With this cross of this high, it tested this 4-hour resistance line again. Now that could now create a potentially new higher high, or if it fails, then it might come back again for another retest. This is so important that the market is maintaining this trend, which is the key to look at for an entry opportunity. So we can see the market here after this drop, forming a double bottom, managed to completely break back to the upside, and that could continue to rise the market here. Now if it continues to rise, as we are looking at, as soon as this candle closed, there is a stronger breakout, so therefore the possibility here to continue to trend back up again. So for us now to get an entry, we are looking at this intraday support again to be retested, and this is the current support. This is what I was talking about, that when the market created structures, it breaks down, it breaks to the upside, has broken back below, has broken to the upside, potentially even come back again for another retest depending on how the market is reacting. So here is, once there is a multiple rejection from this level, that is where you can look at the entry in this market. If it's not getting the rejection, we are looking at to see how the price might be doing. Because to enter, you want to see the multiple rejection, and that will give you always a high probability setup, because the goal here is to maintain a setup that repeats over time, but it goes over and over again, but you still can rely on the system. That is trading, that is probability, right? Win big or risk is small. Win big, risk is small. That's the key, right? Today's some of the trade that opened that in my strategy that has been completely automated. If you guys looked at, I have shared in the chat group. Now this is what I was talking about, that You see that how the trade was open. It's today's trade, and that's where the date and everything timing. So basically, there is only 1% risk per trade, and see that how the small risk and how the big win. That's where the secret, right? Win big, lose small. It's impossible for you to become a trader without losing, right? But lose small, win big, right? Lose small, win big, and repeat the system. You see that the strategy that I trade, I have automated fully. It's now 2026, guys. Nearly there, right? It's time to automate a strategy. There was a time, remember that when 1770, for example, 1750, right? People almost used stone to count during that time period, right? There was no way that you have a calculator. At that time period, if our ancestors asked, can you solve this problem, square root 2? Do they have a calculator? No, right? Or square root 4 plus 3 divided by 2. They didn't have a calculator. They had to do it manually. Now, you have a calculator. You can just press the button and that's all. Simplified. Now, no one is gonna solve this unless you are in any kind of mathematical examination. No one is gonna solve this one by manually, right? So, in the same way, in trading, there was a book by Jesse Livermore. I read that is fully. So, in his time, they used to trade on the pot shop. And they used to go to the pot shop. People were sitting on a table like this school chair. There's a board, okay, BOARD, and all the instrument is listed there with the graph. And you need to raise your hand either to buy or sell. And you have a lot of opportunity to look at other traders, what they are doing, and you can make your decision based on that, right? So that's the time it was. Now, and then it changes, right? No one is gonna go to the pot shop for trading anymore. They upgraded to a phone, right? Have you seen the phone like this, dialing with a like this? Did anyone? With a wheel in it, like like the motor handle. You need to cross, you need to rotate the handle to get a connection, and you call the exchange will put you in another connection, and then you will be given the connection to your broker to place an order that upgraded to the phone. And then it becomes much easier that you can place an order over the phone instantly. Then upgraded to the charts. Now you can look at the chart instantly, right? You can place a trade. Now it's that time. What is next? Think about the next. This is the next. What I have bringing here. And you don't have to work anymore, right? If you can step into the next. So that's what here I'm working on, to the next. And it's already there, right? And this is what we will be working on, to the next, where everything happens on auto, risk managed, lot size, strategy placed on the trade will go itself. All right, so are you guys in the next or in the past? Now, if you are not in the next, you're gonna fall behind. Don't fall behind. Stay connected by smashing the like button and also hit that subscribe button if you haven't done yet. Press the notification bell so that you're not missing any of the content that I'm posting every day. Now, here the market is on this one here. The price is coming for a pullback, and this is interesting structure again. With this structure formation, we will be again using pending order. If we find that enough confirmation here for possible bouncing back to the upside, we will be trading in the direction of the trend. Here is the move. And so your 30 minutes candle close coming shortly after. So with this, it might form even an inverted head and shoulder and breakout, or you could see that continuation back. Currently the market entirely in a sideways. So right, so when the market is moving in a side, we are preparing for a directional bias. First of all, you need to understand that in fact ultimately which way the market is gonna break out, and based on that we can enter. By the way guys, I see that likes is gone up, but would you might bring it to the upside little bit by smashing the like button before we look for the next setup to see how the market may do here. Now here is if you look at with this doji, there is an impulse here, right? And as we discussed in a few minutes earlier, the structure is here and we see that break below. Now this market can still continue to rise back here to the upside to create a new higher high here. So that break to the upside could lead that market to create a new higher high. Okay, getting that rejection back above, and it's finally potentially, you see there is a breakout that could move back to the upside again, and so with this break below, we can see the market again gaining that momentum back above here, and with this break to the upside here, looking at the market structure, potentially bounce back and create a new higher high. So here is a doji that you can see on the 15 minutes. We are looking at, there's a news coming in 1.5 hours. So that's gonna also move the market. We will see that. And here at the moment, the market slowly, you can see, is preparing for a trend, a move. And with this bullish engulfer, price has broken that low where there's a bullish trend continuation here in that market. So with this movement that you can see, with this bullish impulse, expecting the market to potentially drop down further back below before it break to the upside here. The market became in that area a little choppy. The previous session that we have opened the trade, if you guys looked at, was in a stronger trend directional bias. So here at the moment, it becomes in that area choppy, and that choppy ultimately gonna break out because we see there is a multiple liquidity grab from this support. Now that breakout could be potentially to the upside because the market trend is long-term bullish here in that market. So to find an entry, we need to look at the most important area of value. The market is showing a significant bullish price action again back to the upside. 4-hour price action just has crossed this high. Now because there's a volume in the market, we can expect it to continue to trend here back to the upside, and if it continues, then you can expect new higher high here. With this support retest the market now breaking that upside here, and we may see the market continue to rise back, and as with the first day of trading week, we may see that continuation and the market slowly breaking out of the structure. With the candle close in 30 minutes that you can see, it's a full body green candle close. The market here from this support just grabbing the liquidity, the prices revert back to the upside. That means directionally it's showing bullish, and because it's showing bullish directionally, we may see that potential further continuation. Now for me to look at entry opportunity, as the market trend is bullish, we will be waiting for an established uptrend and then break of structure, clean break of structure, breaking any of this swing low, and then looking at entry. That's the plan for this session. Seeing an established trend, waiting for a break of structure, and then entry. Any trade also I'm going to share in the group. If when I am not on live, I do share here everything. So that being said, guys, we are almost nearing to the end of this session. I'm coming on live twice every single day to trade the market. If you're enjoying, make sure you stick till the end. Every day, all this live, there's a lot to take from here. Now, as these 3 weeks is highly volatile, and you want to trade these 3 weeks every day twice, so that we have the better understanding about the market structure, about the market and the trend. That being said, thank you for joining here, and I'll see you again very soon. in the next live trading together. Until that, stay well, stay happy.